Hi there, and good morning, and welcome to the Trade Setup right here on BloombergQuint Live. It seems to be a placid day. Remember, a bunch of Asian markets are shut for trade today, so we have thin trades on the Asian side. Any which ways, the US futures are flat after Nasdaq 100 weighed heavy. So, individual stock-specific action might be the order of the day. Let's first get a sense of what the world markets are doing, just to get a hang of what's happening around us. So, this is what the US markets did overnight. Well, as I said, the Nasdaq 100 was the one which actually came off a little bit, and therefore that was weighing in on the market. So that's the first key point. You have to bear in mind that as I'm reading out, apparently China has said that they are going to cap higher commodity prices in order to tame inflation. And there's this chart again on the Bloomberg terminal. I have it in front of me, which shows how, okay, right here, which shows how commodity boom has left inflation behind. But because it might be rearing its ugly head again in the minds of the lawmakers, there could be a need, or there could be a possibility that nations might step in. So this chart was interesting, right? Because it showed you how commodity prices are actually, inflation is lagging commodity prices. And maybe that is one reason why apparently China has made these statements today about trying to keep a lid on the commodity prices in order to ensure that inflation doesn't quite catch up. So this could be very interesting. I don't know the repercussions of this for the metal names. Steel prices, for example, even India, even after raising Indian steel companies raising prices yesterday, there's still a bit of a gap between China and India prices. But keep in mind, if you're trading steel or commodities, those markets look 3 months out. And if 3 months out, Chinese actions are looking like their prices are going to peak or come off, then irrespective of how strong results are, these stocks might come off. So just keep that in mind. Anyways, we'll get to that in a bit. But this is because this chart was really interesting, and thanks to my colleague, we will bring it up. It's just important to showcase that. Asia, as I said, Chinese and Japanese markets are not functioning, so therefore it's a fairly flat line performance across Asia. And I really doubted the SGX Nifty would be indicating anything different, or that we'll have a very different, dramatically different start for the Indian markets as well. So it's probably promising a flat start. Remember yesterday too, it was not a trending day. It went all across and eventually ended flat, with metals and FMCG giving support to the index, but otherwise it was a fairly placid day. The only good part is that we did not crack too dramatically yesterday, despite these fears of maybe a lockdown coming in as well, right? I'm not saying there was a lockdown going to come, but with CII saying that it's okay to have a lockdown, it was pretty interesting, because a few people may have thought that maybe that will come in. But I think the central government is resisting the urge for a lockdown. So that was one. Bank Nifty took support at 32,000. Remember, I was talking about yesterday. I was talking about this yesterday about 32,000 being a key monitorable, and the Bank Nifty did find support at the 32,000 mark, which is a key monitorable, I think, from a banking perspective. And frankly, the Bank Nifty could make or break the index in the near term. The broader end of the spectrum, I just think the sugar and the ethanol plays are running very hot. And from whatever little I hear or analyze, they may have steam for the longer term. So keep in mind, I have no idea if a Dhampur and a Balrampur after the rally yesterday can do more. Maybe they could, maybe they couldn't. But they're not terribly expensive. And if the cyclicality goes away, then there might be some merit there. There's this article that I have written on the BloombergQuint on our website. You might search by my name and just read a bit about what the thesis behind the cyclicality in the sugar space is, and whether it has gone away, and could that help? Maybe it could help you in decision making. So do try and do that. Equity flows, foreign investors sold about 2,290 odd crores, and DIs bought about 552 crores. So that was the activity. I'm not surprised. The first day of the month, after nearly about 10,000 crores sold in April, another 2,500 crores gross flows sold by FIs on day one. Of course, these numbers will change a little bit, but this is just the first day of sorts of May, and we've already had this. So decent day for earnings today. On the large cap side only, Adani Ports worth more, on the Nifty, that is. The broader end of the spectrum, Apollo Pipes, which has run pretty hot, by the way, ahead of the numbers, has gained about 22%, while the economic factors or the economic activity is not that high, but interesting. Adani Total Gas, which had a 7% uptick yesterday, L&T Infotech, as well as IIFL Securities. And we know what brokerage firms have largely done. So it'll be interesting to see whether they can repeat. Any kind of disappointment in IIFL Securities, I think the markets would punish the stock. So do watch out for that one. What about stocks to monitor in the session today? Well, I'm starting off with cement. RSEC has said, this is RSEC research, which came out in the note yesterday, which said that the South India-based cement players should be in focus because there's a price hike of 10% YOY and 3.2% month on month, and this is good from a cement pricing scenario for southern companies. So I think the South cement price per bag right now is about 391. Now remember, this 391 could be 380, 400, whatever, depends on different brands, different geographies, but on an average 391 versus about 357 YOY, which is pretty strong, 379 month on month. So this is as per a brokerage. Of course, we still have to get independent confirmation, but if the southern based cement companies, the likes of India Cement, Ramco Cement, etc., are in focus today or rally today, you should know why they're doing so. So that's why I've brought this up. I think the stock of the day could be Tata Chemicals, and for the wrong reasons. The numbers not quite up there. So the revenues were up 11%, but EBITDA really cracked, about 29% down. EBITDA margins came down from 16.8% to 10%, and that's a pretty steep drop for Tata Chemicals. Now, they have said that there are one-offs which impacted profits. They have said that on the TCNA side, there's a 45 crore spike in energy prices due to the polar vortex. You could read about polar vortex, Google polar vortex energy prices, and you will get a sense of how the polar vortex phenomenon impacts gas prices, because the demand obviously goes up. But this Tata Chemicals is saying was a one-off, was a big spike, and there was a tax asset write-off of 16.5 crores and some refinance cost and impact due to floods, which also impacted the bottom line. But having said that, that 600 basis point drop in EBITDA margin is very, very steep. Nirmal Bang, the brokerage, wrote a sell note on Tata Chemicals about a month and a half back, and they were trolled heavily in business circles for doing that because the Tata Group company, everything is doing well. Why so? Well, the thesis might turn out to be true. It's a very expensive stock, viewers, mind you, and they need to do everything right. The fact that an expensive stock has come out with a rather disastrous quarter might mean that the stock could have some downside today. Let's wait and watch. Apollo TRICOAT is the other one. The numbers left a bit to be desired. It's again, TRICOAT is actually not expensive. APL Apollo is, though TRICOAT too, the prices have really shot up in the last few months, ever since they announced the merger. But the revenues were down on a quarter-on-quarter basis. I've chosen a QOQ because the YOY assessment would be wrong, because last 15 days of March last year were locked down. So YOY assessment is out, and therefore I've chosen a quarter assessment, which is actually not the right way to compare companies. But this year we are doing that. So revenues down on a quarter-on-quarter basis, profit after tax down on a quarter-on-quarter basis. This should mean that the stock ideally should correct, because it's not a cheap stock. But I think Apollo TRICOAT will move exactly in line with how APL Apollo moves, because there is a 1-to-1 swap ratio because of the merger, impending merger, which has already been announced, by the way. So be careful if you're trading Apollo TRICOAT. You should watch out for Power Grid. That could be an interesting one. Motilal Oswal's note is interesting. So they've maintained a buy with a target price of 255 per share. They are saying that because of the INVIT, there is, and because of the INVIT, the order book comes off, the capex schedule makes way for a higher dividend, because there is less cash required for Tata Chemicals. They see about 2,700 crores of upfront cash from the OFS sale is potentially distributable to shareholders, and the total estimated dividend implies a dividend yield of 8%. So watch out for Power Grid in the session today. They are also saying that there is an additional dividend distribution potential from a share dividend from SPVs, 26% stake sale in the 5 SPVs as a further transfer of assets to the INVIT, made for additional dividend distribution potential as well. So on a dividend yield of 8% according to Motilal Oswal calculation, this becomes a stock to monitor. Lastly, I would watch out for Airtel, Godrej Properties, and Varun Beverages. Varun came out with a very strong set of numbers. Godrej Properties, I think he's now spoken enough number of times that don't look at the quarterly performance. Look at the sales volumes, and the release suggests that the sales volumes was very strong. So to watch out for that. And Airtel, I hear from dealing room sources, could be a very interesting stock. It was active yesterday, Therefore, do watch out for Bharti Airtel as well. So these are a few names that I reckon that all of us should keep an eye out at about 9:15. But the market's expected to be flat. Watch out for 32,000 on the bank nifty. That is the key monitorable to my mind for the index per se. Otherwise, the action will be restricted to the non-nifty names. Thanks so much for tuning into the trade setup today. Please stay masked up, get vaccinated if you can get that appointment, and stay safe.